Wealth, freedom, access. These are just a few of the benefits of investing in the stock market. So why would anyone not do this? Money, or really the lack thereof. You see, most people think they can't afford to invest in the stock market, but the truth is you really can't afford not to. That's where we come in. Our mission is to help you build wealth one video at a time. Welcome to the vault. What's going on, YouTube family? In this video, I will cover the 4 key things that you must do in order to get started investing in the stock market with little money and grow your small account with consistency, no matter if it's just $1,000 or $100 that you're starting off with. Doing these 4 things covered in this video will almost guarantee your success in the market. Now, if you want us to release more videos more often, please subscribe and turn on the notification bell so you know exactly when we release new content. Later in the video, as an added bonus for sticking around with us, I will give you what I believe to be the best stock to own for the long term. And get this, it's only $15. That's right. Also, right now, comment below on what next topics you want us to cover on the channel, because this channel and all of this content is made for you. Without further ado, let's get to it. Now, the first thing you want to do when you first start investing in the stock market with little money is soak up as much information as possible. You want to find as much free material like these YouTube videos and other things like podcasts to learn. While experience still is the best teacher, learning what to do and how to do it before you invest a single dollar will save you so much more money than you realize. Investing in things like books and paid programs are also going to be instrumental to your success in investing in the stock market. They give you direct access to the insight of already successful individuals. In life in general, I found that it is much less stressful to learn from others' mistakes rather than my own. Now, however you decide to learn the stock market, just be sure that you are consistent with your approach and soaking up new information daily. You always want to be as confident and as sure as possible with every investment, especially when investing in the stock market with little money. Which brings us to our second key. As you start to acquire this newfound knowledge, the next thing you want to do when you first start investing in the stock market is be meticulous. To be meticulous means to show great attention to detail and to be very careful and precise. A meticulous stock trader plans every investment, always does their due diligence, and knows when not to trade. A key part of consistent success when trading in the market is to always have a plan. Our motto in the Vault's coaching program is to always plan your trade and trade your plan. What this means is that you always want to know exactly when you're getting in and when you're getting out. And in doing so, you eliminate the influence your emotions have in your trading. A topic we cover more in depth in our free course. The link to sign up is in the description below. Another key to your success in the stock market is going to be doing your due diligence for your investments. I mean, it seems like a no-brainer to want to research where you're putting your money to work, right? I thought so too. But believe it or not, a lot of investors make this mistake. They follow the hot tip from a coworker or an uncle or from some random guy on Instagram and make an investment solely off of that and that alone. If this sounds like you or someone you know, boy, am I glad you found this video. You have to stop doing that. It's your money. You should want to know that it's somewhere safe. You wouldn't just send your kid to someone's house without at least having a conversation with the homeowner, right? If you would, do me a favor, call the number on your screen, turn yourself in. For those of us that would not, you should have that same type of conversation with the stocks you invest in. Another extremely important key to the meticulous trader is knowing when not to trade. You want every trade to have the highest chance possible of being profitable. And the way to do this is by not overtrading. It's very easy to feel like you need to catch every move in the market and trade constantly. But doing so does not make you a better trader. It actually worsens the quality of your trades. I found that it's much better to have tunnel vision when investing in the stock market. Find a handful of great companies and really get to know them. Take them out for coffee, meet their parents, the whole shebang. What you'll find is that you will have more confidence when trading those stocks because you'll have a better understanding of how and why they move. This will increase the success rate of your trades. The goal is to always win more, lose less. Now, before we continue, if you're enjoying this video and want us to make more videos more often, please be sure to hit that like button below and subscribe to the channel. Also, comment below your thoughts and questions, as this lets us know that you want more videos. Now, on to the third key. Now that you have some knowledge under your belt and you've done some research, you'll probably think that you're ready to just dive into the market. Wrong. The next key thing you need to do when you start investing in the stock market with little money is practice risk management. The number one thing I hear when I mention the stock market to the typical person is, but isn't that risky? The simple answer is yes. Just like anything else you invest in, the stock market carries risk, especially when you don't take the time to learn and understand how it works. This is where risk management comes into play. You have to be able to accept that you can't win every trade. That's just not how life works. The goal is to just win more than you lose. I recommend a 1-to-3 risk reward ratio. What this means is basically for every dollar that I put at risk, I stand to make $3. I can sense the puzzle looks, so let me dive a little deeper. Now, let's say I make 10 trades a week. If I only make those trades with a 1-to-3 risk reward ratio, then I only need to be right on 3 out of the 10 trades to be profitable for the week. That means that I could be wrong on 70% of my trades for the week and still be profitable. Still not quite clicking? Take this example. If I stand to lose $50 when I'm wrong or when I'm putting at risk, or make $150 when I'm right, I could be wrong 7 times that week, which would equal a total loss of $350, because each time I'm wrong, I'm putting at risk $50. 7 times 50 is $350. And only be right 3 times, which will equal a total profit of $450. Because again, in this example, I stand to make $150 when I'm right. And I was right 3 times, so 3 times 150 equals 450. So at the end of the week, when we tally up our losses with our gains, or 450 minus 350, we'll see that even though we were only right on 30% of our trades, we still ended the week with profits. You might be thinking, why would I want to be wrong that often on my trades? You don't. You hope to be right as often as possible. But because we know we can't win every trade and the market is going to do what the market wants to do, practicing risk management gives us a dependable safety net. This risk management structure also prevents you from getting greedy and aiming for home runs on every trade, which is a surefire way to burn your account and very easy to do when you start investing in the stock market with little money. With that being said, that leads us to our final key. You've gotten a grip on the first 3 keys. The 4th and final key should be a breeze. Take the account seriously, especially if you're starting with less than $1,000, because it can be easy to shrug at the amount of money that you make from your plays. $10 here and $35 there for most of us isn't enough to get us out of the bed in the morning. You just have to realize that this is not a get-rich-quick scheme. Investing in the stock market is meant to be a marathon, not a race. More money does not make you a smarter or even a better trader. The game is the same no matter how much you start with. Investing in the stock market is a skill, and like all other skills, you need to be educated, disciplined, and patient to master the market. As promised, here's what I believe to be the best stock to own long-term. That stock is Viatris Incorporated, or VTRS. At the time of this recording, VTRS is currently priced at about $15 a share. It is a unique global healthcare company whose mission is to empower people worldwide by expanding their access to a broad range of trusted, quality medications, regardless of geography or circumstance. VTRS was formed out of a merger between Pfizer and Mylan, 2 very well-known drug manufacturers. VTRS is positioned perfectly to establish a dominant presence in the market for generic drugs, which are currently essential to the global pharmaceutical business. VTRS has either developed or is developing generics for drugs that currently make annual sales of $225 billion. VTRS's stock became public for trading on November 17, 2020, so it's still fairly new to the market. And as of right now, the shares are significantly undervalued by many measures. It's hard to argue against any upside potential, especially for the low price of $15. Now, of course, if you've been paying attention to this video at all, you know that we still want you to do your due diligence so you can be sure that you're making an informed decision for yourself of whether or not you want to make an investment in this company. We simply just wanted to put it on your radar. If you've enjoyed this video and want us to make more videos more often, please let us know by hitting that thumbs up button below and subscribing to the channel if you haven't already. Also, all feedback is appreciated and we want to improve the channel as best as we can. So leave your thoughts and questions in the comment section below. Thank you for watching this video. See you in the next one.